Hi, this is Wellington from Wales Way. We are learning more and more about personal financial management. We will go one step deeper today. We have already learned how money is to be earned, how money is to be spent, how we can save, and how we can invest for the future. Today, we are going to consider a very important money concept: time value of money. Learn this concept carefully, and you can become the master of your money and wealth. Remember, our tagline is Wealth's Way is the way to wealth. So let us embark on this journey. The concept of time value of money. Money has different values at different points in time due to factors like interest and inflation. This is due to the opportunity to earn interest or experience inflation over time. You will learn more of that as we go along. The importance, crucial in financial decision making for investments, savings, and loans. The concept. There are two main principles associated with the time value of money. They are future value and present value. These principles are powerful tools in financial decision making and project evaluation. They are being used for personal finance as well as corporate finance. Future value. Future value calculates the value of a sum of money at a future point in time, taking into account compound interest. It helps determine how much an investment or savings will grow over time. For example, if you invest $100 at a 5% annual interest rate, the future value after 1 year would be $105. And after 2 years, it would be $110.25. And then the present value concept. Present value calculates the current worth of a sum of money to be received or paid in the future, considering the impact of discounting. So there are two principles involved. One is discounting, the other is compounding, which are quite the converse to each other. It helps evaluate the current value of future cash flows. For instance, if you are promised $100 1 year from now and the discount rate is 5%, the present value would be approximately $95.24. Present value is essential for assessing the current financial impact of future cash flows. Future value. It can be defined as future value calculates the value of an investment over time, considering compounding interest. Significance helps in understanding potential returns on investments and planning for long-term financial goals. Present value. Definition: it determines the current worth of future cash flows by applying discounting. Importance: aids in assessing the desirability of an investment and making informed financial decisions. Time and compound interest. Compound interest means that not only the initial principal amount earns interest over time, but the accumulated interest also earns interest. That is interest on interest. That's the compounding. This compounding effect accelerates the growth of the investment. The longer the money is invested, the more significant the impact of compound interest. The formulae: future value is equal to present value into 1 plus I to the power n. Therefore, present value equals future value divided by 1 plus I to the power of n, where we use FV for the future value, PV for the present value, I for the interest rate, and n is the number of years involved. So FV, future value, is equal to PV into 1 plus I to the power n. So if you rearrange, PV then equals FV divided by 1 plus I to the power n. Remember these two formulae, they are very important. You write it down somewhere and commit them to memory. The use of the concepts. These concepts are used to evaluate investment opportunities, assess the profitability of projects, and make informed financial decisions. You can use them for retirement planning, determining the affordability of loans, and assessing the value of long-term investments. Applications of future value. Retirement planning estimates savings needed for a comfortable retirement. You have to know that for retirement planning. For investment evaluation, future value concept assesses potential returns on stock, bonds, and financial instruments. And then for making financial decisions, decision support helps individuals make informed choices based on risk tolerance and financial objectives. Now, risk tolerance is important in determining the interest at which you will make your investments. So that is the reason why for decision support, the concept of future value comes into play. Applications of present value. For investment appraisal, as I have told you, it compares attractiveness of various projects. And then for bond pricing, instrumental in determining fair value. And for financial decision making, evaluates cost effectiveness of loans and transactions. There is another concept that arises out of the concept of present value called the net present value. In fact, for investment appraisal, you will be using present value in the context of net present value. We will learn those things later. Considerations and limitations. Now, there is an assumption that interest rates are constant. Time value of money assumes a constant interest rate, but actually it will not be constant. Even within the year, the interest rate can change. But for purposes of present value considerations, we consider the interest as a constant. That's a limitation. Inflation impact. Inflation can affect purchasing power, influencing the accuracy of calculations. Because at the time of assessment, you assume a certain inflation, and at the time of delivering the project, the inflation will be different. And the real world considerations. Users should be mindful of external factors for more realistic financial projections. External factors are economic turmoil, economic changes, positive and negative growth, all those things. will be considered as real world considerations. Conclusion. So, to recapitulate, time value of money principles are powerful but have their limitations. Remember the two formulae that we learned. Importance. Despite limitations, they provide valuable insights for sound financial decision making. Well, that's it for today. Remember, all that we have discussed is part of financial literacy that you need to have. It is the key to unlocking a happier life and a brighter future, and we are here to help you every step of the way. In the meantime, please hit that subscribe button and share this video with your friends. Until next time, this is Wellington from Wellsway signing off. Bye for now.